I wanted to go over more of a short-term, fairly high-risk dividend capture strategy that does involve using the very popular Yieldmax ETFs. Now, I know these funds are very controversial, but I want you to kind of hear me out as I go through this simple dividend capture strategy. Now, this strategy, if everything goes right and works out perfectly, could potentially produce an additional $2,000 to $4,000 a month in dividends on top of any capital gains or other dividends I get from my long-term holdings. Now, this is definitely more of an experiment that I plan on trying out for the next 6 months or so to really see if it's actually gonna work. Now, pulling up my portfolio here, as you can see, I'm currently not borrowing any stocks or ETFs on margin. I do have a little bit of cash, but since this is a margin account, I technically have access to over $100,000 in buying power. But since I only have a little bit of my own cash left, this 100 grand is not my money, but Robinhood's money. And they're willing to lend it to me on margin as essentially a short-term loan, or however long I choose to carry that margin. So I have all my long-term holdings here that I will continue to buy and hold for the next 10 plus years. But for this dividend capture strategy, we're gonna be borrowing just a little bit of this margin at a time each month and using it to hopefully produce more cash for the portfolio. For those of you who are unfamiliar with the dividend capture strategy, also known as the dividend harvesting strategy, it's basically a way to make income by being very diligent about when the ex-dividend date is, and buying typically a significant amount of shares before the ex-date, usually a day or two before, holding through the record date, and then selling most, if not all of those shares after you're scheduled to get the dividend payment. And this is exactly what I'm planning on doing with the Yieldmax funds. So this is just a simple forecast of what I could potentially make going forward, but more so a very rough estimate of what I'll be making each month with this dividend capture strategy. So of course the share price changes on the daily, but these prices here are their most recent price as of when this video was recorded. And when it comes to how much each fund is paying every month, I took the average amount per share of each distribution since the fund started. For example, NVDY here has paid an average of $1.13 per share each month since its inception. So this number here could also be much higher or much lower come payday. But again, this is just a simple forecast. Now, assuming we buy about 275 shares of each of these Yieldmax funds with their most recent price and their average amount paid per share, I'll most likely be making around $2,000 each month by borrowing about $44,000 in margin. Also, just in case you were wondering, QQQY here at number 8 is not a Yieldmax fund, but a Defiance fund, and still a very high-yielding ETF. Now, just to kind of reiterate, I'll be borrowing this $44,000 on margin from Robinhood, and I won't be paying that much in interest, probably about $10 a day, and I'm only holding these funds for less than a week. And I'll be buying these funds before their ex-dividend date, and then selling them the day after the record date to hopefully capture this $2,000. Of course, with every strategy, there are a lot of risks involved, so let's talk about those for a second. Now, probably the biggest risk with this strategy is the fact that each of these funds could definitely drop 5 to even 10% in one day. And that's because each of these funds is tied to an underlying stock. And as we know, individual stocks can drastically fall in the matter of a day or a week for whatever reason. So if all these funds happen to fall more than about 3% in the matter of a couple days as I'm holding them, it would completely erase any returns I'd be getting even after the dividend payments, which would then lead me to either break even or lose money by selling them at a much lower price than I bought them for. For example, if I bought all of these funds for a total of $45,000 with the plan to hold them from the X date through the record date, and they all accumulatively fell 5% within that time frame, I'd be down $2,250. So even if I were to be paid this $2,057, I would still have a net loss of about $200 on that trade. And I do understand as well that you could just hold until prices go back up, or even until the next dividend payment, but then that would also force me to carry the margin month over month and pay a couple $100s in interest. So I'm planning on holding these funds for no more than a couple of days. It's usually about 2 to 3 trading days, and taking the risk that they won't fall more than 5% or more within that time frame. I'll be testing this strategy starting the beginning of June. That's when the next distributions are for the Yieldmax funds. And I'll of course be updating you guys on the strategy and if it is really worth all the work, or if it's even a profitable strategy at all. So let me know what you guys think of this plan, and I'll see you next time.